Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome back to Just Some Guy Trading. I'm Kevin McCormick, and this is my stock market outlook for the month of July and the second half of 2023. Is it possible for us to hit new highs in the S&P 500? Let's take a look at the seasonal patterns in the charts and see what could happen. As a reminder, this presentation is for educational purposes only. All right, if you're new to my videos, then you may not be aware, but I'm a big fan of the presidential cycle and the effects it has on stock market returns. The third year of the presidential cycle is one of the strongest periods for the market, and we actually just exited one of the best periods of time according to the presidential cycle, and this year followed suit, and we had enormous returns in the Nasdaq and the S&P 500. And if you follow this cycle, then you knew it was coming. But now that we're heading into the second half of the third year cycle, things slow down a little. And as you can see here, August and September are typically not strong months for the stock market, and it's where we typically will have a pullback. Is that pullback coming this year? I think it's very possible we'll be looking at a second half pullback in July. Why do I feel that way? Well, let's jump into the heat map and take a closer look at how the month of July typically trades. So here's a heat map of some of the best and worst trading days in the month of July. Very quick, easy way of calculating this. We just look at buying on the open of that day and then selling on the first profitable open after that. Or we have a $2,000 stop set up for this. The important thing to see here is clusters of green and red. So as you can see on this part here, we have a nice cluster of green here with 92, 82, 85% winners to start the month of July. For the followers on my weekly outlook, you know that I got long at the end of June, and I'm still long in part because I expect us to continue to rally to start the month of July. But do I think the entire month of July is going to be strong? I don't. I think we're going to kick into the seasonal patterns in the second half, along with some technical exhaustion indicators that are going to start hitting. And you can see here we get a lot of red towards the second half of July. So I'm expecting us to be strong to start the month of July. And then the second half of July could be the start of a healthy pullback and buying opportunity for us traders out there. So with that said, are we set up for a record high in the S&P 500 in 2023? Well, statistically speaking, yes. The S&P 500 finished up 16% in the first half this year. When the S&P 500 is up more than 10% after a negative year, the median return for the second half is 12%. Let that sink in, folks. There's a lot of people out there going to be telling you that this market is now exhausted. We aren't going to have these same returns for the second half. Not only do we typically have a 12% return when the year before was negative, but this has a 90% accuracy rate. So very strong statistical trend pointing towards us having a continued rally in the second half. And if we just hit the 12% median, we'd be at all-time highs in the S&P 500. I know it's hard to believe after the current rally we just had, but these are the kinds of things we need to look at so we're prepared and have it in our head. But talking about being prepared is also knowing when we could have areas of a market pullback so it doesn't catch us by surprise. And so with that said, let's jump into the last PowerPoint before we get into the charts. What I'm highlighting here on this chart is the recent decline that we had starting in January of 2022 to October, where I think we ended the bear market and marked the bottom. That was about 195 trading days. The current rally we've been in is heading towards 195 trading days as well. July 26th would be perfect symmetry at 195 trading days. Why am I highlighting this? Couple reasons. First reason, Can't call this a bear market rally when it's been going on for 195 trading days. It's a little silly at this point for the bears to still be claiming that. But secondly, symmetry happens in the market. So around July 26th, I think it's very possible that we could start to see a pullback in the market, healthy pullback, not a market crash, possibly just a simple correction. But I don't know how deep of a pullback we're going to be getting because there's so much money on the sidelines and so many hedge funds that missed this market rally. So be prepared if you're an investor out there. I think we have an opportunity to get in this market starting towards the end of July into August and September. And in my opinion right now, we should probably be looking to buy the dips because the next bull market has started. So enough with the PowerPoints. Let's take a look at the true seasonal and some other charts to get a feeling for where July and the rest of the year could end. All right, we're taking a look here at the S&P 500 futures contract with the Williams True Seasonal Daily Indicator. The True Seasonal pattern from Larry Williams that he created helps to highlight where the market could go from a seasonal perspective. Doesn't show magnitude of the move, but it shows us where good buying and selling opportunities could be based on the seasonal information that we've gathered. So for those of you that haven't watched my weekly reviews, end of June, I highlighted that I thought that the rally that usually starts around the beginning of June could start early, and I called for the Tuesday turnaround rally, which we got, and we had this move higher. So right on cue, the True Seasonal this year said, start a rally, and ironically enough, the True Seasonal calls for this rally to continue until July 26th. If you remember back to my symmetry comment, this is almost a perfect alignment to when the 195-day trading days is going to come up. And then you can see from here, we typically could have a market decline all the way into mid-October. I don't know if we're going to have a decline that lasts a couple months, but it's something as for us as traders and investors that we need to understand that we right now could have a nice couple rallies for a few more weeks, but then after that, the bears might get their way and we could have a small pullback in the market based on the seasonal pattern. But as you can see here, once this decline is done, we'll continue our rally and we can end the year very strong, which also aligns with the presidential third-year cycle. When I first started learning about these cycles, I thought they're, a little bit of weird, kind of astronomy kind of thing. But after using them for 5 years, folks, it is really crazy how accurate these trends are when it comes to the market. So that's the true seasonal. Now let's take a look at my favorite selling and buying exhaustion signal, and that would be the DeMark Sequential and Combo Indicators, and see if we have any areas of possible buying exhaustion coming up in the next 2 to 3 weeks. Okay, and the last charts we're going to take a look at are the DeMark Indicators, highlighting possible buying exhaustion that is occurring in the markets. If you're not familiar with these, it's a combination of 9s and 13s. 13 is your more broad buy or sell signal based on exhaustion. And as you can see here, this year on the S&P 500 right now, looking at the futures contract, we had a 9 earlier. And then this last couple days, we actually got a 13 when it comes to the combo indicator. And then behind the scenes here, we're on 11 right now for sequential. So these are areas where we could expect the buying exhaustion to kick in. And that means that, hey, just simply the market's topping because there's no one left willing to buy. But one of the key things with these indicators is when you get a 13 signal, we're actually looking for a move in the next 12 bars. You're going to start to see a theme here. All right, well, we just got a 13 here a couple days ago. If we get another 13 this week on the rally, you go out 10 to 12 bars, puts us at the end of July, once again, on a daily chart. This is the S&P 500 futures contract. If we take a look at the SPY index, also known as the SPX, you can see here we don't have that 13 combo here based on the rules of the indicators, but we do have the count for the sequential almost identical to the futures contract, and we're actually on a combo 7 here. So on the index itself, it's looking like, hey, we can rally for a couple more days before buying exhaustion steps in, and then 12 bars after that, we expect a reaction from the market. Both of those pointing towards the end of the month. But if we move away from the daily and take a look at this on a weekly basis, here you can see our current week as I'm filming this. Today is July 4th. We are on an 8 this week. So if this week we finish up again, we are on what is called the 8 sell setup, and then one more week higher would give us a 9 perfected sell signal. Might be starting to sound like a broken record here, but guess what? That's going to line up perfectly with the end of July. So we have presidential cycle, seasonal cycle, symmetry, DeMark buying exhaustion signals, all pointing towards the end of the July as an area for us to be cautious with how aggressive we want to be with our long positions. That's what we see in the S&P 500. But now let's take a look at the tech-heavy NASDAQ, because that is where we've seen extremely outsized gains to start the year. So here I have the NASDAQ future contract up, and you can see this one's a little different. We've been hitting 13s multiple times this year already. I did a video on this one back in March saying that this was a false sell signal in my opinion because it wasn't backed up by any of the other indicators. That ended up being a correct call, but we just had an area of consolidation. You know, kind of as I was saying before, it indicates buying exhaustion, and staying flat for this long is also a sign of buying exhaustion. Then up here we had this 13, quick pullback, boom, buying opportunity. Same thing here again, this 13 that we had on June 16th, we did get a buying exhaustion. The buyers left the market, but wow, what a small, narrow pullback. We're talking about a couple percentage points where you had an opportunity to get back into the market, and then we hit a 13 again here recently. This is aligning up perfectly with the S&P 500 right now, and as I mentioned before, we can be looking for a pullback to occur up to 12 bars after this indicator hits, which once again points to the end of July for a time for us to start getting cautious. Now, if we take a look at the NASDAQ 100 tech indicator, you can see we didn't have as many buy 13s, didn't have that one back here in March, but then a very similar setup here, 13 buyer exhaustion. We got a very short and narrow pullback, buying opportunity, and then boom, 13 again. So I'm starting to see alignment. That's what I always look for when I'm doing my trading. So right now, in my opinion, we have the alignment with the DeMark buying exhaustion, presidential cycle, seasonal patterns, all pointing towards the end of July as a time to get cautious. So let's jump into just the last slide to do a recap of what we're looking at, but I think you've all got the feel of where I see the month of July going. All right, and just a quick recap of what my expectations are for the month of July and the second half of 2023. I'm expecting this rally to continue for at least a couple more weeks into the month of July, and then we need to start showing some caution because we have a lot of signals lining up saying that that could be the time for a healthy correction in the market. But as I've already mentioned a few times, I'm expecting us to finish the year higher than we are right now, and that all pullbacks will be buying opportunities. So do not let the talking heads on TV scare you out of this market. And when we do get a healthy pullback, maybe end of July, into August, September, those are times for you to be adding to your positions and starting new positions in the stock market, because we're going to finish the year higher than we are today in the S&P 500. Thanks for watching Just Some Guy Trading. Don't forget to like and subscribe to my channel so that you know when all of my new content comes out and you never miss out on a trading opportunity.